Hi there, Brian Amico here from VectorVest, and today we're going to be looking at 10 secrets to portfolio and physical health. I think I'm like a lot of people. I struggle to keep the fat off my body. I tell my wife, I think I look like a pear, or that I have this inner tube around my waist that just won't go away. Over the last 2 years, I feel I finally learned the secrets to losing the fat and keeping it off. You might be thinking, what does any of this have to do with investing and my portfolio health? Well, for the last several years, I've been one of the coaches here at VectorVest helping people become more successful investors. I recently discovered that the same principles that lead to good physical health lead to a healthy and profitable portfolio. One of the clients I work with is Carol. Now, I can't take any credit for her weight loss, but she said she's lost 90 pounds in the last 10 months. In the same time, she has made a remarkable transformation in her portfolio. She took control of her retirement accounts and had to learn from scratch how to successfully invest on her own because she was shocked and disappointed at the results her investment advisor had gotten her. Today, we're going to look at the secrets that have helped her, helped me, and we think can help you too. So buckle up, here we go. Secret number 1 is know what's bad for you. A couple of years ago, I went to the doctor and I told him I was struggling to lose weight, especially around my belly. He asked what my diet was like. I thought my breakfast was good, so I started with that. I said I use skim milk and I have Honey Nut Cheerios because it wasn't one of the sugary cereals, and it said it was healthy, and it was only about 150 calories. Before I could get to my lunch or dinner, he said, stop right there. He then spent the next 45 minutes teaching me about how biology works, how it wasn't about calories in versus calories out. He taught me what carbs and sugars do. I won't give you a whole science lesson here, but basically eating carbs was making it so my fat cells would not release the stored fat. Basically because carbs increases insulin. My body wants to use the fat for energy, but it couldn't, as long as I kept eating carbs during the day. No matter how much I exercised, as long as I continued to keep eating carbs and sugars, and thus my insulin levels were up, the fat wouldn't leave the fat cells. My mind was blown. I thought I was eating right, but I was totally wrong. Well, what does that have to do with investing? The first thing that you need to do to fix your portfolio is to stop buying bad stocks. If you continue to buy bad stocks, all you'll be doing is managing bad stocks all year long. Well, what's a bad stock? Well, the easiest way to pick out a bad stock is if you look at a graph and it goes from the top left down to the bottom right. Another way is if you look at a graph and you see the price has high volatility, up and down, it's really going nowhere, or it's just very volatile and you don't want to deal with something like that. It has movements that you can't or don't want to handle. Here's a few examples. Here's GLPG. It's got a lot of volatility, it's got negative earnings per share, and it's in an overall downtrend. OSTK also has negative earnings, and it's in a downtrend. VSAT, negative earnings, high volatility. PDFS. Notice the earnings are dropping. Not quite negative yet, but they're falling consistently, and the stock is in a downtrend. AMBA, high volatility, dropping earnings, it's in a downtrend. NVRO, negative earnings, it's in a downtrend. ATRA, negative earnings, it's in a downtrend, high volatility, and it's going nowhere. I hear from investors all the time that they're buying stocks like this. Once you stop buying the bad stocks like this, you can begin the process of eliminating the bad stocks from your portfolio. Hopefully you saw some things in common there. Downtrends, high volatility, dropping or negative earnings. I'm telling you, once you stop buying the bad stocks, you can begin the process of eliminating the other bad stocks that are currently in your portfolio. Just like when you start to eliminate carbs or sugars, your body is then able to dump the excess stored fat from the fat cells. So secret number 1 is know what's bad for you and stop taking it in. Secret number 2, don't believe the hype, believe the facts. Remember I told you I went to the doctor and told him I was eating Honey Nut Cheerios? One of the things he was teaching me was just be careful of those statements that are on labels, like this can lower cholesterol, this is better for your cholesterol. He said those things could be misleading because it might just be comparing it versus eating something that had more carbs and more sugars in it. Basically, it was still bad for you, but not as bad as something else. So once you know the facts about what carbs and sugars do to you, you'll be able to easily determine what's good for you to eat. Again, what does that have to do with investing? A lot of people make the mistake and buy stocks just because the companies are well known or because they're getting talked about by the gurus on TV. After all, those other people, they're on TV, they must know more, right? Well, here at VectorVest, we like to deal in facts, not hype. We look at the fundamental and technical data for each company, and we calculate indicators such as relative value, relative safety, and relative timing. And we rank them for you so the best combination is at the top. Every day, you have an unbiased evaluation of stocks. So if you ever get a stock tip again, take a look at it in VectorVest. We tell our prudent investors to focus on stocks that have a relative value and a relative safety over 1. That way you know you're dealing with a fundamentally sound company. And you should only buy stocks that are in uptrends. One way to easily tell that is to look at the relative timing and make sure it is above 1. By doing those things, you'll be able to deal in facts and not hype. Secret number 3 is to look at the ingredients. This secret is a continuation of secret number 2. You want to look at the ingredients. For example, I'd get those little ketchup packets and mayo packets and be amazed how many times they're sneaking in high fructose corn syrup. I couldn't believe it when I found out that a cup of skim milk had 11 or 12 grams of sugar in it. As an investor, you want to look at the ingredients of a stock. We categorize those ingredients as value, safety, and timing. We look at a whole bunch of things so you don't have to. For example, for value, we're looking at things like earnings and earnings growth rate compared to interest rates and inflation. For safety, we're looking at sales, debt to equity, business longevity, earnings performance, and price volatility. For timing, we're looking at the direction, the magnitude, and dynamics of a stock's price over multiple time periods. So all you have to do is look at the ingredients of RV, RS, RT, and VST. Secret number 4 is fill up on the good stuff. To maintain a good health, one thing you should do is eat as much beef, chicken, and fish as you want. Really, you can eat as much of those things as you want. Also, eat green leafy vegetables. You can eat as much of that as you want. Just stop when you get full. When you're eating the right foods, you're going to notice you're not as hungry as often because your body will be using the stored fat for energy. Well, again, how does this relate to investing? Well, you can buy as many good stocks as you want, but stop when your portfolio is full. You'll notice when you're buying really good stocks, you won't be selling them as often and won't be looking for new stocks as often. In other words, your portfolio won't be as hungry as often. But when it is hungry, fill it up with good stocks. Now you might be asking, well, what is a good stock? Well, think about all the reverse of what we talked about earlier that made up a bad stock. We're going to be looking for stocks that go from the bottom left to the upper right of a graph in as smooth and as steady a pattern as possible with low volatility. We're going to be looking for rising earnings steadily. In addition, look for RV and RS to be above 1. Look for RT to be coming above 1 to show that it's in an uptrend. All right, secret number 5 is don't let small losses turn into big losses. In other words, keep your losses small. Let's face it, it's hard to eliminate carbs from your diet. They're everywhere, and they taste good. So let's be realistic. You're going to eat some carbs every once in a while. It's okay to eat some, but don't overdo it. Have that slice of pizza, but don't eat the whole pizza. Know when to stop. Well, let's relate that to investing. Well, let's face it. You're going to have losing trades. There's no stopping it. It will happen. But you've got to keep your losses under control. To do that, you'll need to set your line in the sand as your stop price and stick with it. I recently worked with a client who told me of a trade that he was in LOPE. He originally was going to sell it when it crossed below the 40-day moving average. When that happened, he said, well, I'll move it lower. And then he forgot about it, and look at it now. How can you avoid that? Well, here at VectorVest, we calculate a stop price for each stock every day. We tell prudent investors to use that stop price as their last line of defense. It sure would have helped with LOPE. Here you can see Apple. It's another popular stock. But you see here, it fell below the stop. At that point, you just cut your losses and move on. You can't let small losses turn into big losses. Keep your losses small by having a stop price in place and sticking with it. Secret number 6, size your position. This one is also a continuation of the prior secret. For a healthy diet, you should still keep your portions within reason. Don't overdo it. Eat until you're full and then stop. You can still eat too much of a good thing. Well, let's talk about it as an investor. The way we look at it is you should size your trades. You don't want one position to overweight your portfolio. We typically would say to invest an equal dollar amount in each position in your portfolio. For example, if you have $100,000 in your trading account and you want to trade about 10 stocks, you would invest about $10,000 in each position. All right, let's move on to secret number 7. Secret number 7 is timing is everything. With your diet, it's not always a good time to eat. Don't constantly graze every time you walk through the kitchen, especially on carbs, because you'll always keep your insulin levels up and you won't use your stored fat. Eat when you're hungry, stop when you're full. Simple rules. When it comes to your investing, it's not always a good time to buy. There's a time to buy and a time not to buy. You only want to buy when the market is in an uptrend. Without getting into all the fine details, here at VectorVest, we simply look for a green light. That tells us the market is in an uptrend. Once we get that green light, if the market continues higher the next day, that tells us it's safe to start to enter the market. And if it's the very first green light, you might just slowly step in 1 or 2 positions at a time. Secret number 8, be patient and stick with it. My wife wisely said to me, well, Brian, you didn't put all of that weight on in a week. Don't expect to lose it all in a week. Losing weight is a gradual process, but you've got to stick with it. When it comes to investing, many investors get impatient and try to make back all of their losses in one trade. Don't do that. That could make a bad problem a lot worse. Some other investors also get frustrated when they don't see big gains in a short amount of time. Keep in mind, you're retraining your investing brain, possibly breaking years of bad habits. It'll all be worth it in the end. Once you stop buying bad stocks, start getting rid of the bad stocks you do have, and replacing them with good ones, you'll start to see your portfolio grow over time. Be patient with it. Secret number 9, have a support system. When it comes to your health and starting a healthier diet, it's important to have family and friends who support you in your new lifestyle. It's hard to stick with it if your spouse continues to bring home donuts and M&Ms. Trust me on this one. The same can be said for you as an investor. If you find you're hanging out with friends or coworkers or watching TV shows that continually tell you about stocks you shouldn't be buying, you should avoid those conversations and shows. Here at VectorVest, we have a weekly coaching group which helps to remind you of the rules and sticking with it and supporting you. In fact, you remember Carol we talked about earlier? Carol told me the weekly coaching sessions are invaluable. They help reinforce what she has learned. All right, secret number 10. Actually do it. It's not enough to know what is right. You need to do it. I'll say this. After 2 years, I now know that carbs and sugars are what make me fat. But do I lose weight just because I know that information? No, I still need to take action and do it. Sometimes it's hard to do, and sometimes I fail. But I know if I want to lose fat, that's what I have to do. As an investor, You may know what it takes to be a successful investor, but sometimes it's hard to do it. It's one thing to know what to do. The important thing is for you to take action and do it. If you need help implementing anything we talked about today, I have 2 action steps for you. One for your diet and one for your investing. First, very quickly for your diet. If you don't know what to do or want more information, here's a resource. It's a book called Why We Get Fat and What to Do About It by Gary Taubes. Great read, very eye-opening. You can even YouTube him. He's got some great YouTube videos out there for free. All right, let me give you the action steps for your investing. If you don't know what to do or how to do it or need help, you should register for our full Successful Investor course. You might already be aware of the Quick Start course built into the VectorVest product. If not, it's found on the Training tab. And as the name implies, it gets you up to speed very quickly on the concepts of investing successfully. After creating that Quick Start course and coaching clients weekly for at least a year, my fellow coach Todd Schaefer and I knew we had to create a more in-depth step-by-step course. So we got together with Dr. DeLito, the founder of VectorVest, and we developed the Successful Investor course, 6 Weeks to Steady Growth. It's designed to take you step by step through the system that you need to safely and steadily grow your portfolio each year. The outcome you get from this course is a complete A to Z system which shows you how to grow your account and consistently average 15% per year or more. If you think about it this way, our Quick Start course does a great job of highlighting the main concepts of each section. The full Successful Investor course takes each section and dives deep. While maintaining a laser focus on becoming a successful investor, we teach you everything you need to do step by step. First, you'll be very clear on the overall game plan. Then you'll know exactly when to buy, both for the overall market and for individual stocks. You'll know exactly what to buy and how to find the stocks to fill your portfolio. You'll know exactly when to sell, whether you're locking in profits or minimizing losses. You'll know exactly how to set up your trades and manage your portfolio. And you'll know exactly how to enter your trades with a broker, both to initiate a new trade and to exit a trade. Here's what a few students had to say after they took the course. John said, "It'll help you make better trades, reduce your losses, and earn more profits with less time." Richie said, "I've taken several other investment courses, and this one is among the easiest to implement and stay on track." Danny said, "Take the course and follow what it tells you. You'll not regret it if you are serious about being successful." Lucine said, "Just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically." Robert said, "It's an excellent course to take and well worth the money you will spend and likely earn enough in your first trades to pay for the course." Registration for this course is currently open, but it won't be open much longer. Go to VectorVest.com/TSIC. That stands for The Successful Investor Course. So go there for more information and get yourself registered before registration closes. Again, go to VectorVest.com/TSIC and let's make this the year you turn your portfolio around. On behalf of everyone here at VectorVest, thank you for watching and we look forward to seeing you in class.